Welcome back to the Noble Gold Investments Inflation Series. So far we've come to learn what inflation is, what causes it, how to measure it, and how it's been manipulated to show a lower number throughout the years. Now, let's get to how it actually affects us. Inflation diminishes your retirement savings buying power. If an investor bases his or her investment plan on the manipulated CPI, then you're losing. To put it more bluntly, if your target is just to go above the 7.5%, the CPI right now is at this recording, then you're losing. By the time you retire, you will barely be able to afford your current lifestyle. You must calculate their total required rate of return, or ROR, on a nominal basis. You should consider real inflation, set that as your target. For those of you who aren't familiar with the terminology, the nominal rate of return is the amount of money generated by investment before factoring in expenses such as taxes, investment fees, and inflation. Not only that, you need to adjust your portfolio regularly. As the inflation rate increases, higher nominal returns must be earned to make sure you'll enjoy a comfortable life when you retire. And that's what everybody wants. But that's not all. Aside from considering inflation, retirees are more likely to spend money on things that tend to increase in price more rapidly, such as healthcare. According to the Centers for Medicare and Medicaid Services, per capita, health spending for elderly Americans averages almost $20,000 a year. That is 3 times more than the average working adult. Given that health spending in the U.S. has increased by 4.6% since 2019, just before the pandemic, you can expect that serious healthcare spending would be more than twice, if not 3 times annually. This means that even if the manipulated CPI goes below 3%, retirees will be hit harder than others because the costs that affect them most they continue to rise. Now, it's not all doom and gloom. Social Security provides an annual cost of living adjustment, or a COLA. The 2.8% COLA for 2019 was the largest in 7 years. When the COLA helps, Social Security benefits fail to keep up with inflation, let's be honest. Also, the CPI underweights sectors such as healthcare that have experienced price increases much greater than the overall rate of inflation. Because healthcare costs generally take a larger portion of our income as we age, Social Security COLA isn't enough.